Hello, everybody. Dave Pike here, IDC World Source, business development out of Toronto, the Toronto office here in Ontario. Happy that you guys could all join us today. I can see that there's a number of people that are still coming on board, so we appreciate you taking the time out of your busy day. To kick things off here, I've had the luxury of sort of presenting Zainab to you folks now a number of times over the years, and had the luxury of doing it again at our recent university day, our spring university education day here in Ontario. And for some of you have seen parts of this, I know that quite a lot of the feedback was quite good. A lot of great things here to unpack. Obviously, CPP has been one of the premier providers that and partners with us here at IDC, and I'm sure you on this phone call here today. They've been very busy behind the scenes, and obviously, making some enhancements to certain products. And this presentation is going to be no different for you. Obviously, they're a player in the whole life space. I know Zainab is going to sort of be sharing with you some of the details and some of the enhancements that they've been doing, and also some of the bigger conversations that I'm sure that you and we are having with clients and advisors out there about sort of the next phase for intergenerational wealth or generational wealth and the transfer of that, and sort of how are we going to manage that moving forward. So also for those of you who were in part of our sessions that we did for the spring training, you might have heard a gentleman speak by the name of Mr. Tom Deans, and I know that he also had a number of recommendations to sort of take it to the next step to maybe protecting more of these families. So without further ado, I know we have lots here to unpack. I think for what we're going to do is take most of the questions off towards the end of today's session, just to make sure that we have enough to sort of cover. But I can see you're here, Zainab, and I'm going to pass the baton over to you, and I'll sit back and watch it all happen again.
Thank you so much, Dave. You always give me such a lovely, warm welcome, and I really appreciate it. I'm just going to share my screen at the moment, everyone. So you should be able to see the presentation on the screen. I'm really excited to be here in front of you today for a number of reasons. We will be talking about the Foresters portfolio. And as Dave said, we've made significant changes and listened to what the advisor community and our clients are saying to us. So I've got lots of good news to share, with a lot of good news to come in a couple of months. But let's get through the boring stuff. Look, to get your C credit, I know you're not interested in it, but you do need to be on for 55 minutes. If you're sharing a screen, maybe you're in an office and you're all on one kind of device, just know that you need to be on your own device to be able to get a CE credit, okay? So let's go on with the presentation. So you can all see my screen, can you? Okay, so today we're going to talk about estate planning and some tax efficient strategies that you can use with your clients. The reason that I like this presentation is because it's very concept driven and it builds it from the base upwards. And then we end with some great case studies that really bring a lot of what I'm talking about to life. Before we begin, this slide officially doesn't belong to this presentation, but whether you've heard it or not, I'm really happy to share with you that as at May the 1st, Foresters par product, our Advantage Plus, the dividend scale interest rate has increased to 6.25%. That's a 75 basis points increase. Why were we able to significantly increase the dividend scale so much? Well, you know, our PAR fund, we've been working on the asset allocation for a number of years, and it's in a place now that it supports this higher investment return. The portfolio management process has also changed. to enable that we can maximize our DSIR. The investment assumptions were updated and refined, and we've used smoothing of unrealized gains and losses that help decrease the volatility in that dividend scale interest rate. In a nutshell, what does this mean? The illustrations are going to look a lot better from a cash value perspective. So previously we were at 5.5, we're now at 6.25, in line with the market, and we now have an extremely competitive par product for you to continue to take a look at. So that's great news. We also have an incentive that runs with Foresters. Not sure whether you know about it, but let's talk about it now. What do I need? From January the 1st to December the 31st, we just require 10,000 in net FYC to get you an extra 15% bonus that we pay in February of the following year. The beauty of this is the more you produce, the more your payout is. We don't just cap you at that 10,000 net FYC and just say, okay, advisor, you did that much, you get 15%. The more you do, the better your bonus will be. So that's something that we do run on the Forester side, and it's going to be great to be able for you to take advantage of this. And this presentation will show you plenty of areas that you can take advantage and hit that 15% bonus. So coming back to the presentation, when we talk about estate planning, what do we think about? A lot of people think about this picture on the left-hand side, you know, a huge mansion with acres and acres of land, you know, and with Lake Ontario in the background. But actually, the word estate and estate planning can also be assimilated to the picture on the right-hand side, where we've got a home. I mean, for those of us in Ontario, maybe it's like, you know, downtown somewhere. And this property can also mean that this is a client's estate and does need to be looked after. So what is an estate? An estate is made up of multiple different assets. Yes, your home is one of them. RRSPs, maybe a cottage. The amounts of your clients that have a cottage, that would be part of their estate. Any investments, any jewelry, maybe it's handed down over generations, an antique, car, and any other property. So there's lots of different things that make up an estate. By the way, please do ask questions, comment on what you like. We will be reviewing them mostly at the end. So do ask your questions and we'll try our best to answer all of them. 40% of estates in Canada at the time of settlement were worth over 250,000. So it means that, you know, 40%, 4 out of 10 people that you're speaking to will have an estate over this amount, and that really needs to be planned for. And, you know, Dave mentioned it before, intergeneral wealth transfers. Yeah, it's a real problem at the, well, it's a real opportunity, let's say, at the moment. You know, Canada has an aging population, and that population have built up significant amount of wealth over the years that they've been working. And it is predicted that close to $1 trillion of intergenerational wealth transfers is expected over the next 10 years. What does that mean for us? It means, as an advisor, each and every day, there's $254 million on the table of intergenerational wealth. So when you're speaking to your clients and doing their needs analysis, it's really important to touch on these factors. Many Canadians, surprise, surprise, are not prepared. 57.6 of Canadians do not have a will in place. And nearly 10% of us that do say that we do have a will, it's not up to date. And you can see from the stats here, those numbers really add up. So 62% of Canadians don't know that having a will does not prevent an estate from being taxed after death. Having a will is definitely one part of the estate planning process, usually comes at the end, but it does not mean that you have planned for the tax that you're going to incur after death. So the opportunity for advisors is that, 57% of Canadians are not aware that life insurance can contribute to tax efficient estate planning. And you will see by the examples that we present today that it can be a significant tool when you're planning for someone's estate. So as an advisor, you educate your clients, you're educating them to really make them realize how important having the right steps in process to make sure that their family are well taken care of whilst they're alive and after they pass as well. So helping your client understand that, estate planning is really important. Client, do you want to make sure that your true wishes are followed and there are no unintended results after you pass? You would want to maintain that family harmony. I can see that family is really important to you, but most important of all, client, the CRA is going to be your main beneficiary if you don't plan for your estate. And you wouldn't want that, would you? You pay so many taxes while you're alive. You wouldn't want to pay even more to the CRA after you pass. So really helping them with those trigger questions can start planting that seed. Life insurance can really help plan for your estate, client. Why? For a number of reasons. It has valuable guarantees. There are some flexible features to customize that coverage. And generally, there's a tax-free death benefit amount available after death for your beneficiaries. Foresters Financial has been around for over 150 years. We know a thing or two about helping Canadians, and we've been doing it for a number of years. We're different in our approach, but we are specialized in what we do. From a strength and security point of view, again, for those of you that have looked at our products but don't know too much about us, there are certain slides that you might want to take a picture of because your clients might want to know who Foresters are, who you're applying your life insurance policy with. So this is a great slide to take a picture of. We've been awarded A at AM Excellent Best for 24 consecutive years and running. We boast assets of 18.5 billion. So we have a very strong and well-capitalized balance sheet and a surplus of 2.1. Our LICAT ratio is 182.5%. We're extremely proud of that because the industry average LICAT ratio is around 135, 138%. Why do we boast about our LICAT ratio so much? It's because it shows the insurance company's ability to pay its claims. So most importantly, when your client is covered with Foresters, we are in it till the end and we want to make sure that we pay claims. So we are in a very good position for that. We're a different kind of insurance company. I don't know if any of you have gone on LinkedIn recently, but check it out because we had our Elite Advisor Conference last week and a lot of people are talking about the experience they had with us and how enriching it was because we are a different kind of insurance company. We're not a stock insurance company or a mutual insurance company. We are a fraternal insurance company. What does that mean? It means that we operate for the benefits of our policyholders. We call our policyholders members. So anywhere on Foresters literature where you see members, we mean policyholders. We engage in community service and provide benefits that go beyond that insurance coverage. So yes, we have the insurance solutions for you, but as soon as your client's policy is approved, they can take advantage of 12 complimentary member benefits, and they're put in these various buckets: community grants, scholarships, community and volunteer opportunities, and well-being benefits. Again, I'm not here to talk about the member benefits, but in my follow-up email, I will be sharing our key 12 complimentary member benefits so you can take a look at those. And again, just reminding you, your client can start utilizing them as soon as their policy is approved, which is great. Coming back to the topic at hand and estate planning, let's go back to basics. What is estate planning? Estate planning is the process of arranging for the management and disposal of a person's estate. Part of that process, yes, includes drafting a will if one is not already in place. What's a will? It's a legal document that describes how property and other assets are to be distributed after death. Again, it's great to go back to basics because your clients probably don't know a lot of this information. And when I was presenting this presentation at the university day, a lot of the advisors in the rooms were taking a picture of so many different slides. So it's good to revisit back to basics. Client, do you know what happens without a will? Well, when a person dies without a will and owns property that is worth more than their outstanding debts, the provincial laws determine how the estate is distributed and they appoint an executor. As a consequence, this takes a lot longer for the estate to settle and may lead to additional stress on your family during an already very difficult time. The assets also may not be distributed in the most tax efficient manner that you would wish. A will is not part of an estate plan. It usually is the very last step in the process, covering the taxes and other expenses when an estate is being settled should also be a big part of the planning process. When an unmarried individual or surviving spouse passes, they are deemed to dispose of their assets in the tax year of their death, which really doesn't give you much time. This assessment is called a deemed disposition and is used to calculate the capital gain. Now, how do you calculate capital gain? This isn't a math seminar, but in its simplest form, it's fair market value minus the adjusted cost base. And when we calculate the adjusted cost base, you take the purchase price plus any acquisition costs, plus capital improvements, minus any depreciation of the asset. I find examples way easier to understand and retain that. So let's take a look at this example. Suppose you bought a second property for $450,000 and incurred some legal fees and land transfer taxes. Later, you decided that you wanted to make some improvements to the property and spent $10,000 on a new roof and $17,000 on an extension. How would the AC be calculated? Well, the purchase price of the property is $450,000. The acquisition costs were $9,500 and capital improvements to the property were $27,000. So in total, this property cost $486,500, and that's the adjusted cost base. Let's say you sold the property at the fair market value of 850,000. You would minus the ACB to that, and what you're left with is a capital gain of 363,500. Again, think of your clients, your prospects, your sales funnel, the people that do have a second property without even realizing they've probably incurred quite a significant capital gains on that property, even if it's a condo that they bought 10, 15 years ago. This is where we at Foresters come in. We offer affordable solutions that your clients are going to love that can contribute to tax-efficient estate planning. At Foresters, our flagship product is the Advantage Plus. It's a fully underwritten participating whole life insurance product, and it really provides families with cost-effective permanent insurance tailored to their budget and their unique protection needs, especially when it comes to estate planning. You're looking to get the most face amount for your premium dollar. This is where we shine. We have lifetime insurance protection, fixed premiums, tax-free death benefit, cash value accumulation, and it's even higher now with our dividend scale interest rate increasing to 6.25% and the opportunity to earn dividends. The plans that are available are offered to you at 3 different ways. There's a 10 pay, a 20 pay, and a pay to age 100. All 3 of them are extremely competitive in the marketplace. If your client is up to the age of 50, we can offer no initial paramedical or lab work for up to $1 million. And clients aged between 51 and 55 still can get $500,000 of no medical. Our face amount goes up to 25 million. Those of you that know and use our quoting software, it's called Sky. Make sure you update it because our new DSIR is reflecting in the illustrations now, but you can quote up to 5 million. Anything above 5 million, please go to your local regional sales team to get a quote. Those of you that are in Ontario, you would come to myself and Glenn, and we will be able to get a special quote for you, and we can get it quite quickly. Those of you out west, Atlantic and East, we have a fantastic sales team that's there to help you through every step of the way. So let's take a look at where Foresters is in compared to the marketplace, because we've made significant strides to decrease our price to make sure that we are the most cost-effective permanent solution available in the marketplace. So we're taking a look at our 10 pay. Our 10 pay cannot be ignored. It is one of the highest face amounts available with equal premium across the ages, but also for older ages as well. So if there's anything that I do want you to note down, it's yes, our DSIR has increased to 6.25%. Foresters Advantage Plus will give you the most face amount for your premium dollar, especially the 10 pay at all ages. Now we're taking a look at a male non-smoker, taking out 250,000 of the enhanced insurance option for the Advantage Plus. And we're taking a look at different issue ages and how much it costs. So let's just take a look at the first line. The Advantage Plus annual premium for 250,000. I don't know if you can see my mouse. Let me see if I can hover it over here. Give me a moment. Okay, you should be able to see my mouse now. The clicker is on at 30 years old. Your client pays just under 5,000 annual premium for 250,000 of permanent coverage. Company A's premium is a lot higher at $6,200. So the savings are 21% if you choose Advantage Plus with Foresters. But let's say you've got a quote out at the moment and you're listening to this webinar and you're thinking, hey, I didn't know that the price was so great with Foresters. I've got a quote out at the moment. Let me match that premium. If you were to match the premium with Company A, we will be able to give you 27% more coverage for the same premium dollar that Company A has given you. And across the ages, you can see how much savings your client can make or how much extra coverage we can give at Foresters Financial with another company. So again, I do urge you to take a look at us. And this screen is showing you a female non-smoker taking out 250,000 of our Advantage Plus. And you can see again, the story is the same as the previous slide. A female, age 30, for 250,000. I'm 25% cheaper when it comes to premium. My premium is better than anyone else out there in the marketplace. And this is for the enhanced option. But if you were to match premium, I can give you 35% more coverage for the same premium dollar. So again, take a look at us for permanent insurance solutions. This is our 10 pay, and I've just showed you male and female. Let's take a look at our 20 pay. This is a male, 20 pay, specs stay the same, 250,000 of permanent protection in our par whole life product. And you can see that our Advantage Plus is priced extremely well in the market, saving your client 30, 25% more than any other company in the market. And at some points, if you're matching premium, we can give you up to 50% more coverage depending on your client's situation. And now with our dividend scale interest rate increasing, I can also give you a good cash value story as well. And this is of a female for the 20 pay, very, very strong in the marketplace. So our 10 pay, our 20 pay, we do very well. And this is our pay to age 100. So the same theme continues. So with our Advantage Plus, it is an estate par. It's a true estate par. Where we shine is, estate planning, but also for your small business owners. And that's probably the next webinar that I'm going to do the next time we come. If you want to maximize the capital dividend account and make sure that that ACB is grinding down to zero earlier on, Advantage Plus would be the product that you want to take a look at in those scenarios. Now, in the summer, we're coming out with a complementary product to Advantage Plus, where we'll be able to give you another estate par, but it will show some higher cash values in the earlier years and lots of other bells and whistles. But the Advantage Plus will always be strong where it has been, and that is estate planning, maximizing your client's premium dollar, and for small business owners that want to capitalize on their CDA credit. Okay, so this is where this product really, really shines. And if you're looking at some of this content and thinking to yourself, oh, this looks pretty good, maybe I need to delve into some more casework, or I want to know a little bit more about the underwriting process, or how does Foresters fare with XYZ, whatever it is, please reach out to your local regional team and get a meeting with your regional vice president. They will be more than happy to share all the great things that we have to offer and do some casework with you. Another one to write down as a sweet spot for this product is we fare really well with your rated clients. Now, why is that? The rating is only applied to the basic insurance amount, making the enhanced insurance option very affordable for clients with higher risk factors. Let's take a look at this example. We've got a female, age 35, a non-smoker, taking out the 20 pay of the enhanced insurance option. Total coverage is $100,000. The basic insurance amount is the one that will have the rating applied to it. So a monthly premium on a standard plan like this is $101. With a 200% rating, it is less than 12% increase at $112. Okay, so again, another sweet spot to note down. My client is rated. Take a look at Foresters Advantage Plus. We only rate that basic insurance amount. Okay, so another way which we do well. So let's start with going into our first case study. And again, these examples are really, really good. I want you to think about people that you've spoken to in the past, your current pipeline, or anyone in your circle that you know is in this situation. And after looking at this case study, you can go and share with them the great options we've got available. The title gives it away, Cottage Conundrum. So let's take a look at Sean. He's 57 years old, divorced with 2 adult children, a son, 32, and a daughter, 28. Sean bought a cottage in Ontario for $130,000 20 years ago. This is unheard of because now in Ontario, those of you that live here, we cannot get a cottage for this price. The current value of the cottage has increased to $750,000 at $750,000. Whilst the son loves to visit the cottage and frequently goes with his family, the daughter not so much. She lives in Vancouver and rarely gets to visit. Sean currently does not have a will. Again, there are many people in Sean's situation currently in Canada. Now, assuming a tax rate of 25.6, the tax liability for the cottage would be approximately $97,500. And you can see the calculation that's been done on the screen. Sean meets with an advisor to discuss estate planning. He explains that while he plans to leave the cottage to his son, he really wants to leave an inheritance of a similar value to his daughter too. He currently has over $500,000 in investments that he plans to leave his daughter, but this he knows may be subject to tax and doesn't quite equal the value of the cottage he plans to leave the son. The advisor recommends a participating whole life policy. Why? Because it provides tax-free death benefit amount to cover the tax liability and equalize the inheritance. And the enhanced insurance dividend option offers Sean the most affordable premiums at his age. Now, when they took a closer look, they realized that Sean would need around $350,000 of life insurance when you took into account for the capital gains on the cottage, capital gains on Sean's investments, equalizing the inheritance with his daughter, and then leaving a little side for Sean's final expenses. The Advantage Plus pay to age 100, the enhanced insurance option for someone in Sean's situation, a 57-year-old male non-smoker, gave the best premium available for the amount of coverage that he wanted. His monthly premium is just under $720. Now, let's say Sean passes away 20 years later at the age of 75. His total premiums paid have been 173,000, let's call it. That's still 177,000 less than the final death benefit amount payable to equalize the estate and leave to his family. So you can see that the Advantage Plus is one of the most affordable options for anyone that's looking for estate planning or just looking for a large sum or any sum to put away for permanently and just let that sit there. So it's a great option for someone in Sean's situation. Once the advisor wrote the policy, we have 12 complimentary member benefits that Sean could take advantage of. What does he need to do that? He just logs into My Foresters. He will need the policy number the first time and answer just some questions about himself, just basic details to be able to log in and get access to all the complimentary benefits. And this is what it looks like. Very, very easy to use. It gives you the benefits at the top, any grants that he could take advantage of, etc. Now, Laura Shaw is one of the 12 complimentary benefits. Remember, Sean does not have a will. And what we've learned today is that having a will is one of the last steps when it comes to estate planning. So what is Laura Shaw? It allows the client and their spouse to create customized will, power of attorney, and healthcare directive all online. And what they can do is fill it out, use it multiple times, as long as the policy is in force, make changes to it whilst the policy is in force. What would they need to do? What I suggest the client does is print it off and get it notarized by a lawyer or a doctor. And it's quite easy to do. Again, absolutely free of charge, and you can utilize it online. So after the certificate was issued, the advisor contacts Sean to remind him about complimentary access to Laura Shaw and reminds him of the importance of creating a will. Sean's really excited to see the many different benefits he can use right away. And for the advisor, it was the perfect time to ask Sean for a referral so the advisor can also help friends and family. So as an advisor, you can use our member benefits as referral tools. There's nothing better than letting the client know that your policy has been approved, you've got these many member benefits to use, and you can write a will. Client, do you have any friends or family in a similar situation? And some of our advisors, our most successful advisors, and a majority, some of them are from IDC, do use this, and they have gotten referrals as a way of getting more business from clients using our member benefits. Okay, so again, if you want to find out more about our member benefits, please reach out to your local regional sales team. They will be more than happy to talk about member benefits with you. What we haven't addressed yet is built-in features. We've got a range of built-in features into our PAR product, the Advantage Plus. The quit smoking incentive plan, the charity benefit provision, Teledoc medical experts, which is a bit like Best Doctors. You get to see it on critical illness plans mostly, but we have it available on our life insurance as well. Children's insurance benefit and the juvenile guaranteed insurability benefit. Okay, we are going to look at a couple of these in a bit more detail, but do know that these 5 features are built into the Advantage Plus insurance contract. The Quit Smoking Incentive Plan. This is what people know most of, but you'd be surprised at how many people don't know the exact details and what it actually means. Basically, I want you to write down, if my client is a smoker and they want permanent coverage, I must look at Foresters Financial. Why do I say this to you? Because automatically we give your smoker client non-smoker rates for the first 2 years. Now, I told you that my 10 pay is extremely attractive. Let's say your client takes out a 10 pay and is a smoker. That's great for us because we will be able to give them the best price available, and 20% out of the time, 2 years out of the 10 years, they will be paying discounted premiums as a non-smoker, even if they don't quit after the 2 years. So again, another sweet spot for us are smokers. Clients wanting permanent protection, that is our sweet spot. Now, as you can see from the incentive, we would love clients to quit smoking. You might have clients sitting on your sales pipeline that are smokers, and maybe you've shared with them some premiums and they've said, you know what, these premiums are extortionate. Advisor, come back to me in a year. I'm thinking of quitting and I'm going to do it this time, and then I'll write that policy with you. If you have clients like that, show them Foresters Financial. We give you not only 1, but 2 years to quit smoking. Whether your client quits or not, it's a win-win either way. But if your client is serious about quitting, how do they continue the non-smoker rates? Well, 60 days before the 2nd anniversary of the plan, Foresters mails the client a non-smoking declaration form and requests urine analysis to make sure that the lower premiums continue. For Foresters, you need to be smoke-free for 1 year. Okay, so you can maintain those lower levels. And just as some visuals, this is a great screen to take a picture of. It kind of shows you the savings your clients can make when they quit smoking, or even if they don't quit smoking. So again, a lot of columns, a lot of numbers. Let's break this down. I'm going to look at the 20 pay, which is the middle column. You can see that. What do we have here? A male, 40 years old, taking out 50,000 of enhanced insurance option, the Advantage Plus, as a standard smoker. Taking a look at the 20 pay, Company A's annual premium is just over $1,200, nearly $1,300. Foresters' non-smoker annual premium is $865. So the savings over 2 years with Foresters is $844 up to the age of 85. It runs into the thousands at nearly $8,500 if the client continues. Okay, let's say that the client does not successfully quit smoking after 2 years. Well, my premium in year 3 as a smoker premium is still over $200 cheaper than Company A's smoking premium at $1,000. So the savings I make by going with Foresters anyway is still over $5,000 as a client who has no intention of quitting smoking, or maybe doesn't successfully quit smoking. So either way you look at it, now you can see why I say it's a win-win situation. Our charity benefit provision, another great built-in feature. A lot of clients like to give to charity in their lifetime, but also when they pass. So what is the charity benefit provision? Well, when a claim is paid to the beneficiaries over and above that death benefit amount, foresters will pay an additional 1% up to a maximum of 100,000 of the face amount to a designated eligible charitable organization in the name of the insured's life. There's a part in our application form where you can put the designated charity. Again, it needs to be a charity that is registered with the CRA. If your client has a local place of worship, they're usually registered charitable organizations. The donation is 100% tax-free, doesn't need to be included as part of the client's estate, and the donation can be eligible for a charitable tax receipt from the charity. So another fantastic built-in provision that your clients can take advantage of. So client, not only are we going to pay the death benefit to the beneficiaries, but we're also going to pay an X amount to a charity of your choice with the company that I'm going to write your policy with. So what a great story to be able to share. And a lot of people now do want more value from everything because things are getting more expensive and you want more value to be able to give to your client. So choose Foresters Financial. We've got some optional riders with our PAR product, and you can see them on the screen. Not going to dwell over them too much because they're quite similar. We may call things, we might, label things a bit differently. Every insurance company has their way, but these are the optional riders available for your clients when you are writing Advantage Plus and the rate bands, etc. Let's go to the second case study. We only have 12 minutes left. And I do want to make sure that I have time to share with you a few more announcements and maybe some questions that we have as well. Okay, so the second case study, again, it's the second property problem. Think about people that you've spoken to, your clients, people in your circle. This might even hold true to you as an advisor. You might be in this situation. Let's meet Shai. She's age 42, married with one daughter, aged 18, and is about to start university. Shai is a smoker and trying to quit smoking. She purchased a second property 10 years ago for $425,000 as an investment for her daughter. The current value of the property is $975,000. She plans to pay off the outstanding mortgage of $225,000 over the next 20 years and intends to leave the property to her daughter. Assuming a tax rate of 25.6, the tax liability for the second property would be approximately $70,500, okay? And that's what they've calculated. Again, there's calculators online that can help with this, but that's a general ballpark amount. Shai meets with a financial advisor to discuss estate planning. She would like to cover the capital gains as well as any outstanding mortgage payable. The advisor recommends a participating whole life product. Why? Because it gives tax-free death benefit amount to cover the tax liability and other expenses. The enhanced insurance dividend option would give Shai the most affordable premiums, and also you can add some term riders to cover any short-term needs. So let's take a look at how much insurance Shai would need to get. Over $500,000. And how is this calculated? Well, the capital gains tax on the second property, the outstanding mortgage, which again, she wants to pay over 20 years. So a T20 probably makes sense for $225,000. and post-secondary education cost for her daughter, 190,000, which again, a term 10 might make sense for something of this nature. And any final expenses for her when she passes, and she's kept 20,000 aside for that. Now, without going into every single detail, just take a look at the last line. A female 42 smoker taking out over $500,000 of life insurance is paying $221 per month. How is this broken down? The whole life portion, so the permanent portion, is 100,000, a term 20 rider for 250,000, and a term 10 rider for 190,000. Over and above the death benefits, Shy will also be able to donate nearly $600 to a charity of her choice after passing away at no additional cost. Again, Foresters will pay this. Why are we able to do that? Because we are fraternal. Remember our fraternal roots. We're able to offer and go above and beyond just that insurance coverage for your clients and their communities. This is a great option for a single mum like Shy. The total premiums paid after 20 years if Shy quits smoking is just under 50,000, which is 50,000 less than the death benefit amount. So a plan like this for a client who's a smoker is great because the savings really, really can add up through the years. But Shy's daughter may also be eligible to apply for the competitive scholarship and qualify for one of 300 scholarships that we offer clients at Foresters of up to $2,500 off post-secondary school education of that year. You can apply for each consecutive year, meaning that up to $10,000 is potentially available per child of post-secondary school education. And by the way, it's available to children and grandchildren of the insured. Okay, so it doesn't only extend to children, but also to grandchildren. It's funny, actually, we were backstage before coming onto the webinar talking about how expensive it is to send your children to university. So again, those of you that have children, maybe you don't have a Foresters policy, you might want to take one out, even if it's a small face amount, so you can get access to these amazing member benefits that we have. Scholarship application period starts beginning of December. The advisor calls Shy to remind her about the competitive scholarship program and asks if any of Shy's friends have children entering into a post-secondary school application. Shy agrees to refer her friends to the advisor so they can learn more about the many benefits of becoming a Foresters member and policyholder. So again, a great way of utilizing member benefits after the policy has been issued. We've come to the end of the content. So again, look, I urge you to use us to plan for success. Offer your clients affordable solutions that they're going to love. And I hope you've seen some of the solutions that we've shown today that can contribute to tax efficient estate planning. Highlight the unique features of life insurance and how it can help, the valuable guarantees, flexible features to customize coverage like we did with Shy, and the tax-free death benefit amount. Win that business by offering more coverage for your client's premium dollar with Foresters Advantage Plus, and help them get more out of life with our unique member benefits. I hope you're ready to get started. Remember, lots to offer and lots of exciting things to come. I'm just going to put this slide here so you can remind yourself of the incentive that I spoke about. And yes, we've got about 5 minutes left till the end of the webinar.
Yeah, great job, Zainab. This is obviously I've seen this is my second time seeing this, I think now in the past little while. And again, lots of great takeaways. It's clearly that you guys have really gotten quite aggressive into that space into that sort of high net worth space. Out of sort of some of the areas that some of our advisors may have just assumed that you were just in sort of like the hard to insure space and all the other great
Right,
things that you folks are
right,
doing. But
right.
yeah, some and obviously some great talking points too as well about with the wills and estates and
Mm-hmm,
obviously
mm-hmm,
utilizing this product as well
mm-hmm.
to sort of
Yeah.
backfill some of those
So
needs.
yeah, for sure. In a nutshell, Dave, what I want everyone to take away is that the Advantage Plus is really strong when it comes to estate planning and small
Mhm.
business owners. We know where we're strong, and that's where we've kept ourselves in the
Mhm.
summer. And I'm going to come back again and speak to you in July. June the 30th, we're launching a hybrid PAR, which will complement the Advantage Plus offering. So Advantage Plus will be great where it is, but I'm going to bring a new product to you with cash values at earlier stages. It's going to have a juvenile product, joint last to die, and so many other bells and whistles that I'm so excited to share with you. So yeah.
Excellent.
Mhm.
Excellent. That's great. That's exciting news.
It
Exciting
is. It
news
is.
for all of
Super
us.
excited.
Yeah.
So yeah.
So I'm just looking here within the questions. I know Maida's been just chipping away at them. A lot of people that obviously want to see to share the presentation with. So obviously that's a good thing that there's going to be some things that they want to keep on their deck or incorporate sort of within their pitches to their clients. So I know she's
Right.
doing that. I don't see any others. So you
No, nor do I.
and the good news is that I pay attention to is that everybody's still here. So nobody has dropped off. So you managed to keep us all
Results.
alert and engaged for a full
Yes,
hour. So
yes. That's more than I
that's
can ask for. Thank you so much.
without further ado, I guess we'll conclude it now and hope everybody has a great day. And let's go sell some stuff.
Yeah, let's
Right?
go. Thank you. Take care.
All right, take
Bye.
care. Bye now.
Bye.